It's hard to breathe, but that's alright. Hush.
Now, when it comes to marking out your highs and lows, I'm going to keep this one very short and simple. It's very, very important that you listen up. Now, when it comes to, actually drawing up on the chart, I have this tool, horizontal ray line, and as you can see, if we just click on templates, you can see that I already have all my daily, 4 hour, 1 hour, 5 minute, and 1 minute. Those are the only highs and lows that I mark out, and I do on every single time frame. Sometimes I probably won't do the 1 minute because I don't use the 1 minute, but if I'm using that time frame, then I will mark out every single high and low and see where price previously broke structure. If we look at here, if we just mark out this low and say this is our 4 hour low and we have our 4 hour high, right, I'd go ahead and obviously mark that up, and as you can see that all the colors are differently. So if we just draw on my daily range high, as you can see it's blue, and this one's more of a light blue. And if my let's go hourly range low, it's red, right? So they're all different colors. As you can see, we have a low, we have a high, price broken structure to the downside. Now it depends what is considered a breaker structure to you. If price is closing below, then that's considered a breaker structure to me, because I map it out using the wicks and wait for the candle closure. But it depends on obviously what type of breaker structure you like, but for me it's candle closure. As you can see, price broke to the downside, so it's our new low. We now have our new high. Price is within this range, so anywhere, obviously price previously broken structure to the downside, so anywhere within here we look to sell. Price broken structure to the downside again, so what we're doing in here, we're going back in time, and this is very important that you follow this process. I forgot to mention it here, but if price breaks structure to the downside, you go back. You look at where the swing low previously was, and the price broken structure to the upside, which I'll show you in a minute, you go back as well. So you go back in time and mark the highs and lows. Now, even though if we were to look at this here, we'd mark this as our high and mark this as our low, it's important that we go back at least to this high and this low here, and we just look to see what price is doing where it previously broke structure, right? So if we let's just go back to this example, price broken structure to the downside, we have our new low, we have our new high, new low, new high, right? What did price do? We have a new high. Go back in time, we have our new low. What did price do? Broken structure upside, we go back in time, new low, new high. What did price do? Breaking structure upside, new high, new low. What did price do? Broken structure to the downside, new low, same high, and it is most likely a lot of the time the same high and low. What did price do again? Broken structure to the downside, right? Create a new low, create a new high. What did price do again? Broken structure to the downside, entered into new range. So when you hear me say price is entering into new range, that's all I mean is we're breaking above the previous range that we was in. So it's important that we go back in time. You look at where the swing point was, because if a lot of people, they would look at this and be like, this is this here is the high to this low, and it's not. This is the high to this low. So it's wherever where the swing point happened is. If price did this, that would be your high. So if we just look at this in terms of this, as you can see, if we start off, let's go with this low, this high, what did price do? Broken structure to the downside, we have a new high, we have a new low. Broken structure to the downside, new low, high. What did price do? Broken structure to the downside, new low, high. Price do? Structure to the downside, new low, new high, new low, new high, and so on and so on, right? So that's pretty much it when it comes to marking up your highs and lows in terms of ranges.